What is up, guys? Welcome back to the channel, to the second installment of my Let's Discuss series. I will actually be discussing an investing topic, dividend yield specifically this week. I'll kind of talk about that and show you how it works, what it is, how to calculate it yourself if you're interested in that. So I'll get back next week and talk about another individual stock. I think I'm looking to talk about Apple, if that's what you guys are interested in. Please don't forget to like and subscribe if you enjoy my content, as well as check out the latest episode of the M1 Journey. I'll provide a link to that somewhere in the video. And I think that's just about it, so let's discuss dividend yield. Okay guys, so before I get into dividend yield, I'm going to give a little bit of background on what a dividend is itself, for people who may not be as familiar with the investing concepts. So basically what a dividend is a company's net income after they've paid all their bills, met all their liabilities, paid any financial obligations that may have come up. They have their net income, so they decide to either keep that net income and put it back into the business to either grow it, keep it afloat, or do as they please, or they can choose to reward their shareholders for investing in them by paying them out a portion of that income in the form of a dividend. So dividends are usually grown over time, usually grown annually and paid on a per share basis. They're usually paid throughout the year, either quarterly, biannually, maybe even just yearly, or some companies pay monthly. But in times of economic hardship, a company may decide to cut their dividend, may decide to suspend their dividend altogether, but that's usually not as common, only when the economy is not doing well or that company itself is really struggling. So we've seen a lot of that happen obviously this year with COVID, but some companies do endure through that, and companies that have been both paying a dividend and growing their dividend for 25 consecutive years are known as dividend aristocrats. And then companies who have actually continued that on through 50 years are known as dividend kings. So are pretty prestigious titles companies kind of strive for to show their stability and their ability to continue paying the dividend even though the situations around them might not be ideal and that they've weathered a lot of storms over the years. So that's a little bit about what a dividend is. So I'll switch over to my screen recording and I'll get into dividend yield. Alright guys, so we'll talk about dividend yield here. Kind of have a few demonstrations laid out for you to kind of show what I'm talking about, and so show you how to calculate things as well. So I created a company XYZ here, and they have announced they are paying a dividend of $1.50 per year per share, and they pay quarterly, so they'll pay 4 times a year. So that would actually be around 38 cents per share, so it would be $1.50 divided by 4, and that's how much you would get per share if you owned this company. So say you bought a single share at $50, and then they pay $1.50 per share. That would be $1.50 is the annual dividend, and then the share price that's currently at, and that I believe is 3%. So you just take their annual dividend that they will announce, that's decided by the company, and they'll announce before they pay the dividend, but they'll tell you paying $1.50 per year per share, and then at the current share price it's $1.50. Okay, so say a month later after you bought a $50 share, jumps up to $60 a share. Well, barring anything unexpected, they're still paying that same dividend. So the dividend's still the same, but the share price has obviously jumped up, which is what you want to see, really. So $1.50 divided by the share price $60 is 2.5%. Okay, so that's pretty simple. And then if the opposite happens, say that $50 a month later becomes $40. So had a bad month and it dropped down. So that dividend is still the same, $1.50 divided by now $40. And if that is the case, then your new dividend yield would be 3.75%. So that's pretty straightforward there, I think. I guess another scenario we could talk about is what if they have a good year and they actually increase their dividend to $2 a share. Okay, so whatever share price that would be, so $2 at whatever share price would be your new yield. So it's always whatever that annual dividend is divided by the share price, and that's how you get your yield. So like I said, pretty straightforward. And then, so another demonstration I can do is, what if you don't know, I guess, the annual dividend payout, and the only information you can find is the price per share and then the yield percent, which is this number here that I've laid out for company ABC. So if you own company ABC, you own just say one share, I guess, you would take the share price of $80 that I just made up here. Now these are completely made up companies in case you hadn't figured that out. And then you would just multiply it by 3.5%. And that would come out to $2.80 per share per year. Okay, so they will pay you, and if they pay quarterly, that would be 70 cents per quarter per share. So yeah, so if say that $80 jumped up to $100, I guess, and we know it was $2.80 per share, then you just do the same that we just covered. So that would be 2.8%. So yeah, that's pretty straightforward. That's how you calculate a dividend yield. So what if you have an entire portfolio and you want to know what your portfolio yields? If you have a couple holdings and they all pay dividends, you want to know what that yields? Well, I can cover that for you too. So I kind of made up a mock portfolio here. You have 4 holdings. You have Apple, you have 3M, you have Verizon, and you have Pepsi. So looks like maybe you made an M1 account using my link and you got your first investment here and you're putting in $100. Then you made your pie and you just allocated them to be equal weighted. So you're putting $25 in Apple, you're putting $25 in 3M, you're putting $25 in Verizon, and you're putting $25 into Pepsi. So they're all the same. So with their yields as of today, I just checked. Apple has a pretty low yield at just 0.71%. 3M is a higher yielding stock at 3.67%. Verizon at 4.39%. And Pepsi at almost 3%. So these are at their real life share prices today. Not sure what that was. So yeah, so with your $25 you invested times their yield, this is what these stocks would pay you if you invested them per year. So Apple 18 cents, 3M would be 92 cents, Verizon would pay you $1.10, and Pepsi would pay you 74 cents. Okay, so you just add these together, 18, 92, 110, 74, and that will be $2.94 per year. So by you doing absolutely nothing, just not touching these, hoping for the best, hoping they don't cut or suspend the dividend, you will earn $2.94 from these companies by doing nothing, just by investing in them. So if you want your yield for your entire investment here, for your portfolio, that would be pretty simple. So it would be $2.94, what you're earning in dividends, divided by your portfolio's worth. So that's 2.94%. Okay, so say your portfolio has a very good year and it increases with the a little bit better than the average return of the S&P 500, which is about 10% yearly. So you're still getting your $294, but you had a return of $15. So your $100 investment is now worth $115. Very possible. So you would take it with your dividend income divided by your portfolio's new worth, and that would be now 2.55%. See? So I think that's pretty straightforward. If you guys have any more questions, like I said, please share them in the comment section. And then I guess that'll hopefully explain things for you. So I think that's going to about wrap things up for this video. Before I go, I just want to make the point that I'm still not a financial expert. I'm not a financial advisor. Please do your own research and invest at your own discretion. But yeah, I think next week in this series, I'll talk about Apple stock. If you guys have any thoughts or suggestions, please leave them down in the comments. As always, please like and subscribe to stay up to date to all the latest content on the channel. And I'll catch you guys in the next video. Thanks.